Hi, I'm Rayla, a CPA with Finaloop. Over the past week, a lot of different news has come out about bench accounting. The most recent news is that they have been acquired by Employer.com, an HR and payroll company. Now, about a week ago, their website had said that they were abruptly stopping their service. Their customers were not able to access their financials, and they were actually sending their customers away to another bookkeeping company, another accounting service. And now that messaging has all changed, where their website seems to be back up, and they said that they're now acquired by Employer.com, and they're planning to continue their service. Now, thousands of small business owners are left trying to understand if they should just continue with their bench service now that that option is available, or if this is the time that they should really find something better and more suited for their business. Over the past week, I've been speaking with dozens of bench customers, specifically in the e-commerce industry and e-commerce founders, and I've also been closely monitoring social media discussions. And some of the points that I have understood from these customers and from social media about bench's service specifically for e-commerce has been quite shocking, to be honest, from an accounting side. The pattern is clear. One thing that I hear consistently is that the service in bench has been declining over the past few years. But surprisingly, a lot of customers have chosen to stay with bench in the past just because they did not want to deal with the hassle and the headache of moving to another accounting service, finding another accounting service. Now, while these are valid concerns, I would say that to me, this was the most shocking point that I really found out. And this isn't just related to bench, it's more related to the mentality as a small business owner of how you should be thinking about your financials. Your financials, your financial reports are the heartbeat of your company. They are a hugely important tool and growth engine in order to be able to run your business. If you can't trust your financials, then you are literally driving your business blindfolded. You have no idea which direction you're going in because you don't even know where you are right now. This is something that as an accountant, I thought about and I was really surprised. And it's not about bench specifically, but it's really about understanding as a business owner how you should be looking at the concept of your accounting and the concept of your financials. Financials are not meant to be a once a year process where you have your financials for tax filing purposes at the end of the year and you don't need them the rest of the year. Your financials are a growth engine. And if you don't have real visibility into your expenses, into your inventory and COGS, especially as an inventory-based business, like most e-commerce businesses, then you are driving your business without understanding the health of your business today. So if you can't tell me today the state of your business in terms of your inventory, your COGS, your net income, if you don't understand if your business is profitable or not, the first thing that you need to do is find a new provider, to find a provider that can give you that visibility. This is crucial for every small business owner, but especially for inventory-based businesses. That is one point that really shocked me that I just wanted to really reiterate for business owners to really just keep that in mind, because as a founder and as an operator, these are numbers that you need to know. I think the second most shocking point to me from these conversations was the fact that bench, essentially, if I understood correctly, was expensing all of the COGS directly to the P&L, meaning every single time that you purchased inventory, it became an expense right away. And only at the end of the year, they made an adjustment for tax purposes to back out any inventory that was unsold. Now, essentially what this means for you is that throughout the year, whenever you're looking at your financials, they are completely inaccurate, unless you're exclusively drop shipping, or there's a very, very small timing difference between when you're paying those expenses and when you're actually selling them, which is not the case with the majority of e-commerce businesses. So one thing I'll mention for all e-commerce, wholesale, DTC, all consumer brands really, is understanding where you are in terms of how much inventory you're holding and how much COGS you actually had that month. That is the only way to really understand the health of your business in that month, and if that month you are actually profitable. So that was another really big red flag to me for e-commerce businesses, and just another sign that bench is really built for cash businesses, but not for inventory businesses like e-commerce businesses. Now, at the end of the day, bench has always been very clear about the fact that they are essentially a one-size-fits-all approach. They are the jack of all trades in online accounting. So they're able to cover all kinds of businesses. But for specific types of businesses that really need industry experts in that area, specifically related to e-commerce, we see here as a perfect example that this can be really messy and problematic. So you need to make sure that as an e-commerce business, you're working with professionals that really understand your business as well. As an e-commerce business, your inventory and COGS is your biggest asset and also your largest expense. And if you have no idea anytime in the middle of the year how much you have on hand or how much you actually sold to, what your expenses were for what you sold to customers, then your financials essentially mean nothing. And a lot of people, what they'll do is that they'll track it externally. But then essentially that means still when you're looking at your financials, they're not actually reflecting the numbers of your real business. So you really need to make sure that your financial process makes room for inventory and for COGS and is really built for e-commerce businesses like yours. This transition period, where you are right now in terms of deciding if you want to continue with Bench or move to a new service provider, is an opportunity for you to demand better. It's an opportunity for you to define and decide what modern e-commerce accounting should look like for your business, how you can actually use your financials in order to make better decisions, in order to grow your business, in order to really understand where you are on a day-to-day. Any accounting service provider that you decide to move to should provide you with real-time financial visibility in terms of daily updated books, accurate COGS and inventory, which is really crucial, multi-channel sales tracking, so you really understand the profitability of each of your different sales channels. And you're also going to really want an e-commerce specific breakdown, e-commerce specific chart of accounts, because again, that one I would say is the fact that I saw that a lot of the benches financially did not have this. I wouldn't call it a red flag as much as the inventory and COGS, but it's definitely a point of concern because if you do not have that breakdown that relates to your business, you're missing a lot of important opportunities in order to make smarter decisions. At Finaloop, we built our entire solution for e-commerce businesses to provide real-time visibility, to provide a bunch of different methods and ways to track your inventory and COGS that best meet your business needs, to help you be able to get everything caught up very, very easily with no issues and have e-commerce, real human e-commerce service providers and experts who are here to really help you understand your financials, understand your business. And most importantly, unlike what you had with Bench, where all of your data was locked into a specific platform, at Finaloop, we offer a daily integration with a Google Sheet, so you can have everything exported daily to a Google Sheets. And you can also have a one-time export to QuickBooks in case you ever decide to leave or want to take your data elsewhere. Your data is yours and should never be locked into a place where you cannot access it. So don't let this acquisition announcement distract you from what's really important here, which is the opportunity to decide what accounting service would provide you with that most visibility. And again, whether it's Finaloop or it's another service provider, you need someone who's going to be e-commerce knowledgeable and e-commerce focused so they can really help you and also understands the importance of tracking inventory and COGS. You also want to create a solution and a service with somebody that you really trust. Even if it means having to migrate your data, which of course is never fun to have to transition, but it's time to understand that good enough is not good enough for your business. And making that decision is the hardest step. But it is also a decision that you can't afford to not make for your business. When you make that difficult decision that it's time to find something better, Finaloop will handle all of the hard part for you. We give you free migration and we will rebuild your 2024 financials in Finaloop in less than a week. We will help you get everything back on track with service providers that you trust and you have that real-time visibility so you actually understand what's going on with your business. So when you're ready to stop settling, we're here to answer any questions that you have.